I'm 680 News Senior Business Editor Mike Eppel. Air Canada is coming off a record-breaking quarterly earnings performance. The Montreal-based company made $343 million in its second quarter, and that was happening even as the company was in the midst of joining global airlines and grounding the Boeing 737 MAX jets. Those planes have been grounded for several months now, and Air Canada extending the timeline for when they figured they'll be back in service. January 8th is now the new estimate, pushed past the Christmas and New Year's travel season. Michael Russo is the company's chief financial officer, talking about how those planes have been affecting the overall bottom line.
We operated the MAX on thousands of missions until the March grounding and never encountered any of the reported issues. The aircraft was meeting our expectations from a customer, operational, and financial perspective. Ideally, we are still looking forward to the return to service once all appropriate safety protocols, processes, and reviews are completed by the regulatory authorities.
Air Canada's share price hovered close to a record high today and has been one of the top performers on the TSX, up 78% year to date. Well, the revelation of a massive data breach, another one affecting a financial services company, in this case Capital One. The breaching of 100 million U.S. customers, 6 million here in Canada, social insurance numbers apparently hacked by a now arrested 33-year-old former employee of Capital One and Amazon Web Services. This had fallout on Capital One's share price today. It was down by 7% in Wall Street trading, the company offering free credit protection services, but likely more fallout to come. Beyond Meat became a little bit less tasty for investors today. Of course, this has been one of the big stories of Wall Street since its debut on May the 2nd, with the stock price going up more than 800% since then. Beyond Meat had strong earnings, an almost quadrupling of sales. The issue, keeping up with demand. They're going to do a big stock sale to fund future growth. So they're going to put more shares onto the open market, and that actually had the shares that are currently traded a little depressed today, down by just over 10%. And Under Armour under pressure. The athletic leisure wear company seeing slowing sales in its North American market, and that's a key for Under Armour and any of its competitors. That news had the share price tumbling today by as much as 20% in U.S. trade. From the 680 newsroom, I'm Mike Eppel for City News.